Welcome to this week's Forex Forecast for the week ending September 20th, 2024. We're going to talk about the DXY, the Euro, the Pound, the New Zealand Dollar, and also gold, some potential setups as we head into this week's FOMC. And I didn't have a chance to get this out on Friday or the weekend, so apologies for the delay, but I did have some stuff to take care of. Now, looking at the DXY first and foremost, we have the market coming into this area down here right around 100.6 that we've talked about previously. So you can see that back here, this is clearly a significant area here for the US dollar index. It was support back here in 2023. We got that fake out below this, which obviously led to an intense rally over the coming months. And once again here, same thing, 100.6, and now recently, same level. Okay, so the big question right now is this going to hold up, which could now be a triple bottom potentially, or are we going to get a breakdown from this following this week's FOMC for a run down here toward 99.6. Now, I can make a case for either scenario. Obviously, on the one hand, we have the market going sideways. So like I always say, it's a range until proven otherwise. So that's really important here. You don't want to be shorting the US dollar, in my opinion, into this key support area. If we were to get a sustained break below this, then we could see a run down here toward 99.6. So on the one hand, we have a range bound market. On the other hand, we do have a lot of confluence down here in this area, plus the symmetry from this descending channel. So if you'll notice here with the DXY, we have the market doing this over the past, let's say, year or so. So this could lead to a move down here. This could be a clue for that move down here toward 99.6 to kind of complete that symmetry that we've seen since the highs back here in late 2023. But obviously, no guarantees of that. And again, the market is range bound until proven otherwise. So I don't like the idea of, as I said, looking for US dollar shorts while it's above this area down here, just because we know that 100.6 has been an incredible support here for the DXY. And at the same time, though, you've also got to be a little bit careful trying to buy this market just because it's once again pressuring this area. Plus, we also have a Fed rate decision coming up on Wednesday. So a little bit of a tricky market right now. We do have some unknowns for the DXY, but again, just a range bound market here until we get a breakout either below 100.6 or above this area up here. Now, let's talk about resistance here for a moment, because this up here, both of these moves lower from this area should be no surprise for those of you who have seen recent videos, because you know that this resistance area up here starts with 101.9, okay? So 101.92 is a level I've had on my chart for months, and you can see right here on this wick, that was exactly 101.9, or actually not 101.92 to be specific. And same thing here with this this high here. We had the market coming into resistance and once again selling off. So this area up here for the DXY is going to extend as high as 102.6. And the reason for that is just like we have this symmetry right here for the DXY that we just talked about, we also have this symmetry right here. So going back to the start of 2023, you can see that this was one big channel for the DXY that broke down right here. Notice this bounce right here. So this broke down back in this area, which means that this entire area all the way up toward 102.6 is going to be resistance for the US dollar index. All right, so bulls have a lot of work to do to negate the breakdown that we saw back here. The DXY would have to get above not only this level here, but it would also have to get above 102.6 in order to turn bullish, in my opinion, because it would have to reclaim this channel that it lost back here. And as I said, support down here, 100.6, a break below that would open up the 99.6 area. So next up is the Euro, which is coming into resistance today. If you guys have seen recent videos, you know about the sweep here that we got above that December 2023 high. So this was the high right back here. We got the sweep above this and the retest here on that NFP. So if you guys were watching those videos leading up to this, what I was saying was to look for a short on a retest of this area around 111.20 all the way up to about 111.40. And the first target would be this area down here around 110. So that played out really nicely, for that move down here toward that first target. Now, obviously, we've seen a significant bounce from the Euro from 110. And so the question now, just like with the DXY, because this is essentially the inverse of that, is will we see the Euro rotate lower from this area up here after filling this imbalance? Notice we had this upper wick back here that was unfilled. That got filled today. So the question is, will we see it rotate lower from this area to keep this range intact, or will the market break out from here again? And this is a very similar look to the DXY, because again, it is the inverse of that, for the most part. Look, having been a trader for over 20 years, I know how difficult it can be to find a trustworthy broker. And that's why I'm excited to share with you the broker that I've trusted for 7 years now. I've even met them in person. So I would literally trust these guys with my life. And that is Blueberry Markets, where you can trade over 300 instruments in the Forex market, share CFDs, crypto CFDs, commodities, and also indices. Plus, they have 24/7 support, so no more waiting forever for replies. You can get help no matter where you live. And funding your account or withdrawing from your account is super easy and quick with options like MasterCard, Visa, bank transfers, and Skrill. But don't just take my word for it. They serve over 50,000 traders who can use platforms like MT4, MT5, and their web trader. And they have stellar reviews across sites like Trustpilot and Google. So click on the link at the top of this video or see the link in the description. And when you use my link, you are going to get a 30% deposit bonus. So if you deposit $10,000, they're going to give you $3,000 to trade with. With trusted support, hundreds of trading options, and unbeatable reviews, Blueberry Markets is the broker for you. So we'll see what happens here with FOMC coming up. I mean, we know that this area up here is going to be resistance for this market. You can even see this here on the weekly chart where we did get a pretty convincing close below this area. Now, the one thing you've got to be careful of, and we saw the same thing happen on the pound, which we'll talk about next. But here on the weekly though, what you'll notice is that this closing price right back here served as support on the weekly. So even though we had the market breaking back below this high on the weekly, okay, this right here, this candle, and this area here is now resistance, you can see here on the weekly that the euro never really closed the week below this closing price back here. Okay, so in other words, this close right back here, if you'll notice, this was key support for the euro. Okay, so notice on the weekly that we never got a weekly close below this area. So that's important to keep in mind as we go into FOMC. Don't get too bearish on this market. Just like I'm saying, don't get too bullish on the DXY, because we could still see that move down toward 99.6 on the DXY, which would equal a move, significantly higher here for the euro. But just like I don't like shorting the US dollar into that key support, I also don't like the idea of longing the euro into this key resistance area. In my opinion, if you're longing this here, you're kind of playing with fire, because we still have this resistance area back here that the market lost on this failed breakout. So next up, let's talk about the pound here, which I do want to point out, first of all, what happened here on the weekly. All right, so what you'll notice here, like I mentioned with the euro, we've talked about this upper parallel here in the past few videos. And if you'll notice, going all the way back here to 2023, what you'll see here is that we have this diagonal off of these lows. And if you take a parallel off of this level here, you get a level that extends right off of these recent highs. Now, we know that this broke down on the daily, and we talked about that last week, which, by the way, that hit our target right here perfectly. I'll talk about that in a moment. But what you'll notice here, very similar to the euro not closing a week below that support area, notice what happened here with the pound. Okay, so even though we had the daily closing below this area last week, notice this candle right here. All right, so here's our level. Here's our upper parallel. And you can see where the market closed right above that mark last week. So that keeps this intact as support going into FOMC. And of course, we have resistance up here at these recent highs, right around 132.50. Okay, so on the one hand, we have the market holding above this on a weekly closing basis. That is significant in my opinion, just because it means that the pound is still holding above this area on the weekly chart. Now, last week, what we saw here, and we talked about this at length, but what you'll notice is this is our upper parallel back here. It served as support back here in this area, right? We got the bounce higher, then it failed. Okay, it failed right here on this candle. We got the retest of 131, which I talked about in recent videos. The first target for that was down here at 130. So this was about a 100 pip move from here to here, and that played out incredibly well. Now, obviously, like the euro, we had a very significant bounce to end last week, which put the pound back above this area going into the weekly close. All right, so again, that's going to be critical going into FOMC in my opinion, because it still means that the pound is holding above this support area on the higher time frames. The weekly is always going to trump the daily time frame, just like the daily is always going to be more significant than the 4 hour, etc. So you've got to keep that in mind, guys. 131.40, 131.20, this area is going to be support this week. Obviously, resistance up here at these recent highs, right around 132.50. So if there's one chart out there that speaks to US dollar strength or the potential for US dollar strength, it's the New Zealand dollar. And the reason for that is you can see here that we have the market coming into 62 again. Okay, so this right here was range resistance for this market for quite some time. In fact, pretty much all year. this was range resistance for the New Zealand dollar. We had a bounce from here, back here in this area, close above, bounce from here, and then this failed through this area. Okay, so we're getting a rounded retest right now of 62 following that buy side fake out that we've talked about. Now, the issue here is, of course, the DXY. Like we've talked about throughout this entire video, it's unclear if we're going to get a bounce from the US dollar from that key support. And if you look at the weekly here, okay, this does look pretty convincing. However, again, just like I mentioned with the euro and the pound, what you'll notice here is that all these highs on the weekly, notice all these closing prices right back here. Okay, the New Zealand dollar never closed below this. And right now, this is where the market is bouncing. Okay, so you do have to be careful. Yes, 62 is going to be a failed level. That's going to be resistance right now. Okay, you can see back here, closing prices back here, lows through here, highs up here in this area around 62. Even this low, right? So as of now, it's very up in the air as to whether this up here is going to hold, if 62 is going to hold and we're going to get that rotation lower, or if this up here is simply a higher low for this market before the market takes off once again. And obviously this is going to come down to FOMC. A lot is going to be riding on that this week. So it's a tricky situation to try to trade this one or really any market prior to that Fed rate decision and statement. Okay, so in press conference, I should say. So again, I think that 62 right now is going to be the critical support to watch. If we see the New Zealand dollar getting back above this following FOMC, okay, and closing the week back up here, then I do think that would be bullish back here toward these recent highs. All right, now if we see a reject from here and close a week below this area right around 61.40, then that would be bearish in my opinion toward this mid-range right around 60.50. And last but not least, we have gold, XAUUSD. So a lot of symmetry happening here. This is really what enabled you to, if you played this breakout, let's put it this way, if you played this breakout, this would have allowed you to take some profit up here, not financial advice, but this area around 25.80 all the way up to about 26.20 is going to be resistance here for this market. And the reason for that is you can see we have this diagonal down here. And if you draw a parallel off of this level using these highs back here, what you'll notice is that you get an area between 25.80 and 26.20. Okay, so that's what we're seeing in gold test here today. And you can see a little bit of a rejection here so far from this market, although not a whole lot. So we'll see what we get from FOMC this week. I mean, a lot of these markets, as I've said, are going to rely or really hinge on that event on Wednesday. So looking at gold again, this area up here, this level here, all the way up toward about this one here later this week is going to be resistance. All right. So keep that in mind. If you're trying to short here, I think, again, it's risky to try to trade these markets ahead of FOMC because we could still see a move up here to test this level before we get a further pullback from gold. Now, this area down here, 25, 27, if you want to be really exact, but essentially 25, 20, 25, 30, this is going to be key support for gold. As long as it's above this, then the idea is to buy on dips. But if we were to see gold, close back below this, then of course this up here would be a fake out and start to look a little bit more bearish. All right, but so far looking pretty strong here from gold. The one thing I will say though about this, guys, is that you've got to be careful trying to chase this week. I mean, as I've said throughout this video, I think trying to trade ahead of FOMC is risky. It's always risky to trade ahead of events like that. And the other thing to be aware of here is that we do have imbalances building up with this candle and especially this one back here. Okay, this candle right here, we have not seen any retrace into this. And the fact that we have all these highs back here, okay, you can bet that there is a lot of liquidity sitting down here in this pocket, right around 25.40 all the way down toward about 25.20. So just keep that in mind. In my opinion, if you are looking for buys here, this down here is going to be the area to do it, okay? If we get a rotation lower, a pullback down here, then that could be a buy. But as I said, you've got to be careful here because if we do see US dollar strength, then that could equal a close back below this area around 25.20 for gold, which would start to look a little bit more bearish, all right? But again, be careful with this week though, guys, with FOMC coming up. We've also got some other big events out there, but FOMC is obviously going to be the big driver for the Forex market. Subscribe to the channel and click that bell for notifications. Don't forget to join us in VIP. Claim your 90% off lifetime access. See the link in the description, or if you're on the website, click on that join VIP link. Trade well out there. Be careful with this week's events, and I will talk to you again tomorrow.